Today, I want to talk about the two new CEOs that are fighting back against fraud and going after the SEC, FINRA and the short sellers. I want to give my opinion on whether this could actually cause the squeeze and lead to the SEC actually doing something, or whether it's just another distraction away from AMC. So stay tuned and let's make some money. And now I'll dive straight in with the key information. So, Glenn tweeted saying news out of the CEI or Camber Energy camp this morning. In addition to the potential acquisition in Renault, James announced that Camber Energy will be doing its part to combat the naked short sellers.
On the subject of trading, I will mention that we were made aware of certain action plans announced by other entities in an effort to combat naked short selling. We totally support those initiatives, and we're going to explore with our counsel and other advisors as to what Camber might be able to do to participate in that fight. Short selling should be banned. If you don't own the stock at the time of sale, you shouldn't be allowed to sell it. It just invites manipulation, and it has to be exterminated from the marketplace, in my opinion. So we totally embrace that and want to do our part to participate in the fight.
Now, you may remember Camber Energy that was pumped by the Twitter pump and dump Discord group Atlas Trading. It did generate a large amount of retail interest, but was ultimately a pump and dump for their gain. This could potentially be seen as a good sign, as Camber Energy does have a large amount of retail interest and retail investors still invested in the stock. Again, it could also be seen as a potential negative though, as it is again potentially distracting away from AMC and GameStop. Camber Energy is another company or another stock that right now doesn't have a ridiculously high short interest, just like a number of other companies whose CEOs have came out and complained about naked short selling and have also decided to try and fight back against it. Again, as I said, it could be argued these companies are distracting away from AMC and GameStop, companies that have high short interest and are likely significantly shorted via the use of synthetic shares. And Investor Turf has posted an article saying that investors are actually calling for CEOs to fight back against naked short selling, like GNS. Now, I do believe that any fighting back against naked short selling is a good form of fighting back, whether it's us, the retail investors, whether it's the CEOs, whether it's the board members, anyone that decides to fight back is doing the right thing. However, so far we haven't yet seen it cause a short squeeze. Yes, GNS has run up 1,500% over the last couple of weeks, but again, that's not quite the mother of all short squeezes. Now, there's also another CEO that's also fighting back against fraud, and I think Tony Denaro really hit the nail on the head of what they're doing and exactly what needs to happen. He tweeted saying HLBZ hired Share Intel to investigate stock manipulation. And he said, while this is good, we do need to get some evidentiary details from one of this new group of CEOs soon. While it is good that these CEOs are fighting back against fraud, so far they're only doing it with their trust me bro information from Share Intel. I do think they need to release some actual factual evidence to support the synthetic shorting. I think if they did that, a short squeeze may actually occur. Right now, GNS is saying they appointed Share Intel and found some details of synthetic shares. That's something similar to what Atarian said as well, and something similar to what HLBZ is saying as well. But so far these companies and these CEOs are just saying they found some evidence of synthetic shorting. They haven't told us how many shares were shorted, and by who, and when, and what kind of impact it had as well. I do think these CEOs need to provide us with some actual concrete factual information on synthetic shorting, because then maybe something will actually be done about these crimes. Obviously, as the saying goes, these market makers and hedge funds are innocent until proven guilty, but you can't prove somebody guilty without any factual information. And obviously just saying that we found some details of synthetic shorting isn't factual enough information to actually do something about it. As Tony said, they should share the data with the public because no one wants to wait for a 3-year court battle. Now, as Tony said, the second CEO or the second company fighting back against fraud is this Helbiz, as they've just hired Share Intel for due diligence in the advancing battle against illegal short selling. The CEO of Helbiz said that based on the trading pattern of our stock, we are concerned that our company may have been the target of a market manipulation scheme involving illegal short selling of our stock over the past year, and we are committed to investigating and exposing any wrongdoing. He said by leveraging Share Intel's patented process and proprietary analytics, we will be able to find reporting anomalies among market makers, banks, broker-dealers and clearing firms. And Share Intel also has the ability to track share ownership, and identify any suspicious, apparent or unusual trading activity, which supports our continuing commitment to protecting our investors and maximising shareholder value. Now obviously that sounds great, but if Share Intel really do have the ability to find reporting anomalies and also track the share ownership and identify market manipulation, they really need to release that data. Because at the moment, so far as Carlito tweeted, it's day 5 of these random CEOs coming out and pumping their stocks by making accusations of naked short selling. After the CEO of Helbiz came out and spoke about naked short selling, so far their stock is up almost 200% over the last couple of days. Now that is obviously great for the company, great for early investors and the shareholders of Helbiz. It's not so great for retail investors as this stock hasn't yet experienced the mother of short squeezes. And it seems right now the FUD and distractions against AMC are reaching an all-time high. AMC Tamoon just tweeted about this article saying a death metal guitarist has just suffered permanent hearing damage after seeing one movie at an AMC theatre. Now this article is actually the most rubbish article and the most ridiculous article I've ever seen, full of absolute lies and mistruths. It says a seasoned death metal guitarist incurred his first instance of hearing damage by attending a screening of the children's movie Puss in Boots. He said, "I've spent countless hours standing inches away from 100-watt guitar amplifiers, and yet a kids' movie at an AMC theatre was by far the loudest thing I've ever heard." And he said the trailers were so loud that a small trickle of blood emerged from his left ear just after a few minutes. What absolute rubbish. And he said that doctors have said that he may never hear the nuance in his Boss pedal ever again. Supposedly audiologists and actual doctors were also weighing in on this news article, saying that AMC is basically dangerous. He said that AMC is blowing out eardrums and he's been racking up hearing aid sales like no one has before. This is obviously absolute rubbish, but it just goes to show the distractions against AMC are right now at an all-time high. But right now, even market watch is agreeing that short selling or naked short selling is the biggest risk to the health of today's public markets. They said that Verb Technology joins Genius Group, Helbiz and Created in targeting illegal trading activity. It says a growing number of small cap companies are announcing plans to go after naked short sellers, claiming their stocks are being artificially depressed by illegal trading activity. Now, as I said, this could be a brilliant movement for these CEOs to directly chase after the fraud and chase after the SEC, FINRA and the short sellers. But I think to properly fight back against that fraud and to actually do something about it where there's going to be real change, they need actual concrete evidence. But so far all we've really been getting is lip service, saying they may have found some potential existence of synthetic short selling. And finally, something else that is very, very interesting is that Bed Bath & Beyond has just spent its 12th day on the Regulation SHO threshold securities list. Now, Regulation SHO requires that participants of a registered clearing agency must immediately purchase shares to close out FTDs if the FTDs persist for 13 consecutive settlement days. Now, to end up on the Regulation SHO list, these FTDs need to exceed the minimum number for 5 consecutive days. Bed Bath & Beyond has already done that, and it's been on the list for an additional 7 days so far on top of that. Basically meaning that Bed Bath & Beyond has one more day on this Regulation SHO list before these short sellers should be closing out of these FTDs instantaneously. Again, whether that will actually happen or whether Bed Bath & Beyond will remain on the Regulation SHO list for more than 13 consecutive days is so far yet to be seen. But it is interesting to know that this 13-day deadline is coming up and these FTDs should be closed out of tomorrow at the latest. Now obviously I'll be sure to keep you all updated on the Bed Bath & Beyond Regulation SHO threshold securities list over the next few days. But guys, be sure to let me know what you think down in the comments below. And as always, be sure to drop a like down below, subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers. Also guys, please drop a like down below. I want to see if we can get this video to 1,500 likes for the YouTube algorithm.